Have you ever wondered what a total catastrophic stock collapse looks like from the inside? Well, today we're going to dive deep into a technical analysis report that does just that. It breaks down the absolute free fall of a company called Yuenda Digital Holding. Let's see what the data has to say.
So right off the bat, here's the number that says it all. In just one single month, this stock didn't just fall, it was practically erased. We're talking a loss over 98% of its value. Just gone.
The company here is Yuenda Digital Holding, ticker YDKG. And the report we're digging into dissects a collapse that wasn't just big, it happened with just shocking speed and ferocity. In this timeline, wow, it tells the whole story. Just look at this. On September 30th, it's trading at almost $4 a share. Fast forward just 3 weeks to October 20th, and it's crashed to 4 cents. That is a near total vaporization of value.
So, the big question is, why? How does something like this happen? A technical report basically acts like a detective, sifting through all the data for clues, and what it found paints an absolutely unmistakable picture of what went wrong.
Now, before we get into the nitty-gritty of the indicators, let's just cut to the chase. We're going to jump straight to the report's final verdict. It's incredibly blunt, and it tells you exactly where this whole analysis is headed.
And there it is, the final, unambiguous conclusion from the analysts. This isn't some nuanced hold or a cautious buy. No, this is a crystal clear warning to just stay away.
But the really crucial question is, how did they reach that conclusion, right? So now, we're going to walk through the key technical indicators piece by piece and see the evidence for ourselves.
Okay, this is where the story gets really fascinating. We're about to look at the technical signals, the raw data that traders and analysts use to gauge the health and, more importantly, the momentum of a stock.
Let's start with a really powerful metric, the 200-day moving average. Think of this as the stock's average price over the long haul. It's a key baseline for its overall health. For YDKG to be trading 95% below that line, it hasn't just drifted down, it has completely fallen off a cliff.
And this table from the report? Man, it just hammers the point home. Just look down that signal column. It doesn't matter if it's the short-term 5-day average or the long-term 200-day. Every single indicator is flashing the exact same warning, extreme below. There is zero disagreement in the data here.
All right, next up is something called the MACD. Now, in simple terms, this indicator is all about measuring a stock's momentum. It tells traders if a price trend is speeding up, slowing down, or maybe even about to turn around.
And the MACD reading for YDKG is a massive red flag. The signal is bearish, deep divergence. That phrase, deep divergence, tells analysts that the stock's price isn't just falling, it's falling away from its own momentum, signaling this powerful, relentless downward pressure.
Now for the RSI. You can think of this like a stock's heat gauge. It tells you how fast and how far the price has moved recently, and it helps you spot if it's overbought from too much buying or oversold from way too much selling.
Now here's where things get a little tricky. VDKG's RSI is down at 12.45, which is considered extreme oversold. Now normally, that might signal a buying opportunity, right? But the report gives this critical warning. And a catastrophic downtrend like this one, it's almost always a trap. It's just luring in hopeful buyers right before the next painful leg down.
So let's put it all together. This slide shows the report's overall trend strength score. And the interpretation? Hyper bearish. This is the data's way of literally screaming that the bearish trend is incredibly strong, totally dominant, and shows absolutely no signs of reversing. But, price is only half the story. To really understand the conviction behind these moves, we have to look at volume. That's the number of shares being traded. It's like seeing the actual footprints of the market. Get this, on one single day during the crash, a staggering 570 million shares were traded. For perspective, that's more than the entire number of shares that exist for a lot of big companies. This wasn't a quiet drift downwards. This was a stampede for the exits. So what does that insane volume actually mean? The report is clear. It's the signature of pure panic. Analysts call this distribution. It's when large holders are just dumping their shares as fast as they can. And crucially, there's no sign of smart money, institutional investors stepping in to buy the dip. This is a market completely ruled by fear and capitulation. The sellers are just giving up.
Okay, let's bring all this evidence together and look at the report's final conclusion. What are the risks
And what does the data suggest is going to happen next?
This table is just devastating. The risk/reward ratio shows the potential downside is seen as vastly outweighing any possible gain. And look at that 52-week position. The stock is sitting at just 1% of its yearly high. The report calls this structural damage. It's like a house with a cracked foundation. This isn't just a dip, it's a fundamental break in the stock's integrity.
The report then lays out the very real dangers ahead. There's a serious risk of being delisted from the stock exchange. As a penny stock, it can be incredibly hard to even buy or sell. Trading could be halted at any time. And at this point, it's a purely speculative vehicle, totally detached from any fundamental value.
And all of this brings us back to the core message. This one quote from the report: avoid longs. It perfectly encapsulates all the data we've just seen. In trading, going long means you're betting the price will go up. The report's final message couldn't be clearer. Based on the evidence, that is a bet that is just not worth taking.
So what this breakdown really shows us is how all these different technical indicators can come together to tell one powerful, unified story. And it leaves us with a final thought. When every single piece of data is pointing in the same direction with such extreme conviction, well, that's not just noise. It's a narrative you have to listen to.